Alibaba reported quarterly financial results that sent the stock price soaring. Of course, I'm happy about that because I rated Alibaba stock as a buy all year long in 2025, and I also rated it as a buy when I did a preview video updating my recommendation for Alibaba stock. So I'm happy to see this stock working well. Of course, Alibaba is sometimes known as the Amazon of China, and investors want to know, and they're asking me if Alibaba stock is still a buy after the company announced these results and after it's already soared by roughly 60% year to date in 2025. I'll review the company's latest financial figures. I'll share with you my updated proprietary discounted cash flow valuation for Alibaba, so you see what I calculated as a fair value for this business. We'll also look at valuation on a forward price to earnings basis, and then I'll provide my conclusion on if I think the stock is still a buy or if I'm downgrading it to a hold or a sell.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Alibaba's management team provided commentary on their latest results, saying that driven by robust AI demand, their cloud intelligence group experienced accelerated revenue growth, and AI-related product revenue is now a significant portion of revenue from external customers. Looking ahead, we remain committed to investing in our two strategic pillars of consumption and artificial intelligence plus cloud to capture historic opportunities and drive long-term growth. In fact, AI-related product revenue achieved triple-digit growth for the eighth consecutive quarter. Eighth consecutive quarter of triple-digit growth. That's 100% or higher for 8 consecutive quarters. That's really exciting, and this is really the reason why I've been bullish on Alibaba stock starting in 2025 is the company's rapid expansion in artificial intelligence and really reiterating that theme of artificial intelligence I've been discussing for several years now and giving us another data point how businesses and consumers are responding extremely well to the developments in artificial intelligence. This isn't just a United States phenomenon, this is a worldwide phenomenon. And again, it points to the value that artificial intelligence adds to the lives of consumers and businesses. And those two categories, people and business, will continue spending on artificial intelligence as long as the value exceeds the cost, which right now, the value exceeds the cost by a wide margin. It's way, way ahead of the cost. That's why you see businesses spending so much in this category. That's why you're seeing these kinds of numbers like triple-digit growth. That's why you're seeing numbers like NVIDIA stated in their quarterly conference call, saying that their large cloud service hyperscalers are slated to spend roughly $600 billion on artificial intelligence this year. And the reason the numbers are so large and growing so significantly is because that value exceeds the cost by such a large margin. And that's evidence that there's longer runway to go because there's so much room, so much discrepancy between the cost and the value in favor of making these investments. Overall, though, for Alibaba, the results were not all that great, despite, the really strong performance in the AI segment. Overall revenue was up just 2% year over year. But if you exclude some divestitures, revenue would have been 10% year over year increased. If you look at organic revenue growth, which excludes the impacts of divestitures and acquisitions, the company saying it would have been 10% higher like for like. And that would be impressive because Alibaba for years has been demonstrating decelerating revenue, having a hard time accelerating revenue growth. In recent quarters, they've really pushed it to the pedal and they've really increased this revenue. And that's something that investors have been looking for from Alibaba for several years now. And they are very encouraged by the progress Alibaba is making on the top line. Adjusted EBITDA, which is a non-GAAP measurement, decreased 14% year over year to $5.4 billion US dollars. And this, the company said, was primarily attributable to the investment in Taobao, instant commerce, as well as user experiences, user acquisition, and technology, partially offset by double-digit revenue growth in Alibaba China e-commerce group and improved operating efficiencies across various businesses. And that's true. The company in the most recently completed quarter had fewer employees. If I recall, about 2,000 fewer employees in the most recently completed quarter compared to the same time last year. So about 1% or 1.5% fewer employees because they have over 120,000 employees. So 1 or 2,000 lower is a small percentage, but it does show that they're more productive with fewer people, right? Revenue would have been 10% higher, or, if you look at it without making any adjustments, revenue was 2% higher, and they did that with about 2% fewer people. So that's productivity improvements, being able to do more with less people. The company also reported a decrease in cash flow and pointed to the increase in their cloud infrastructure expenditure and the investment in Taobao instant commerce. So Alibaba, like Amazon and Microsoft and Alphabet, has been spending significantly building out its artificial intelligence capabilities, and those large investments are weighing on the company's free cash flow. But I think it's reasonable to assume that these investments are going to bring in a great return on investment, especially the latest development. The company announced a new chip that's more flexible, more adaptable to the current AI use cases. Something I was a little surprised to see is the company only repurchased $815 million of their ADS in the most recently completed quarter. Alibaba has been very aggressive in their share repurchases, spending billions and tens of billions of dollars buying back their stock. And this has been during the time when I've been highlighting that Alibaba stock is undervalued. And when management teams are also buying back their stock, it confirms many investors' thesis when they expect the stock is undervalued. The company still has a authorization which the board of directors has authorized to repurchase up to another $19.3 billion. And this is effective through March of 2027. So I expect the company to continue buying back their shares. And if there is a pullback in share price, I expect the management team will get more aggressive in buying back their shares. So let me now share with you my proprietary discounted cash flow valuation for Alibaba stock. And for those of you as channel members at the investor tier and above that have access to this spreadsheet, you can see all of the companies I have a discounted cash flow valuation calculated here at the top of the spreadsheet. And to find the Alibaba, you go to the top left and click on that, and you get to the Alibaba DCF valuation. So as of today's update, I calculated Alibaba's intrinsic value per share to be $159. The current market price is $135. So the stock still, even after adjusting for a margin of safety, looks slightly undervalued, ever so slightly undervalued when accounting for the margin of safety using my proprietary DCF framework. I also like to look at the company's forward price to earnings ratio, and Fiscal.ai is my preferred data source for that. And looking at the company's forward PE, it's now trading at a forward PE of 17, near the highest it's been since January of 2023. So I would say at this valuation, given the company's accelerating revenue growth, given the strong investments in AI that's bringing back good return on investment so far, I would also say that this is slightly undervalued when measuring by the forward price to earnings ratio. So I mentioned I've had Alibaba stock rated as a buy all year long, and I last updated that on August 20th, 2025. After the earnings results, I still think the stock is a buy, and I'll update that on September 1st. However, I will say that I'm less bullish on Alibaba stock today than I was to start the year. And that has partly to do with the significant increase in share price. It's already up so much this year, and the valuation has increased, where to begin the year, I thought the stock was significantly undervalued. And now I only think the stock is slightly undervalued. So there's been a big change in the valuation. But also, there's been big change in the performance. The performance has improved. You're getting a better company today than you were getting in January of 2025. But I think the share price increase has been faster than the increase in the company's performance over this time. So I'm a little less bullish on Alibaba today than I was in January, but I still think the stock is a buy for long-term investors.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.